Hi and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
Looks like the sound's doing well here. Alright, thanks a lot. Okay, you can hear me loud and clear. Alright, welcome to another evening session of the closing bell for week ending 25th of January 2013. Okay, market for the KLSE has turned from bad to worse. We open up at 1643, market close 1635. So that denotes actually a sign of weakness. Normally markets gap up and try to sell off. Means smart money is trying to exit under the disguise of of good news. That's what it does. Now, if you look back, this is what we are seeing here. You could see. Let me just show you what I mean. You see the market open up here and then start to. Let me change the color first. I don't like this color. Okay, change it to pink. Market open up here and then sell off in here. Now, to me, that's actually an upthrust. Okay, if you look at it from a standpoint, so that means going into a Tuesday. Now, remember, Monday is a public holiday in Malaysia, the KLSE. However, the other market, regional market in Singapore and Hong Kong, are open. So that's why a lot of the smart money don't like to carry the trade through a long weekend, especially Monday. It's a public holiday and the market will only open on Tuesday. So that begins why we see a selling right now, and probably we see that also in the FKLI too, right? FKLI is let me just switch to the futures one. You can see that, right? So it's also showing a little bit of upthrust here. Uncertainty moving on. Now, last Saturday, let's review my notes last week on the 18th of January. At this point here, let me just bring it up what we saw here. This was 1718. This was last Friday, and this was just opened up on Monday. We saw this thing called the mushrooming top. Look like curving down, and US wicks was looking bearish. So we were expecting the KLSE to taper off, and we were really seeing a sell-off here. But what really surprised me was the tremendous, price push that we saw this bar here. Okay. Blue is for sell. No. Blue is a black candlestick. Blue is a black candlestick. Okay, it doesn't mean it's sell. Okay, so we see this black candles here. Okay, you can change it to black or you can change it to white candle in here. Then we have a doji tail coming here, so you can see that doji tail around here. So the market eventually, what we call a sign of strength. We got volume coming in on this bar here. Well, what's very important is the hitting and the retest of the 200 moving average, like we saw it here. Market rebound back. Now, like it or not, smart money institutional don't like stocks that they have bought to dip below the 200 moving average. If that's the case, they would index to bearish, and that doesn't look good. So whatever it is, they would try to support it above the 200-day moving average, which is at a 1624, this level here. So that's what you could see immediately when this thing goes below. Market try to push up. So what's important going forward to the coming election, which is could be March 24th onwards, market will likely to just congest and move sideways. Okay, very important is that KLSE cannot break below the 1624 level. Okay, that's a good point to take note of. Now, if you're investing, look to buy into the months of March, where we are likely to see a sign of strength at that level. At this point, it's difficult to really pinpoint how the market would flow, but as it is, my take is next week the market could only go up to 1650 level in here. It tend to be biased on the sideways market. Okay, last week I did say that I was hoping to see sign of strength at 1670, 1680, this level here, but we finally see it at the 1630, 1620, and it did touch momentarily on 1602, which is the lowest point in here. So that tells you immediately the market reversed back because funds stepped in, especially the smart money, to really buy and push it up the next 3 days. Now what we are seeing now is this what we call in Richard Wyckoff automatic rally, because based on very low volume. You can see that automatic rally based on very low volume here. You can see volume diminishing, which means we are coming to a likely no demand bar. No demand bar is considered as a sign of weakness because institutional, or in this case smart money, are really distributing to the unsuspected